It's been a wild 24 hours of trading on Wall Street. Yesterday, after I posted the Market Outlook video, there was news that Iran struck back at the United States by sending missiles into an Iraqi military base. All of a sudden, the futures market was down over 1%. Then we got news that a Boeing airliner crashed in Iran, and there was some initial speculation that perhaps it was shot out of the sky. So a very chaotic overnight session, which then led us to this morning when we had more of a reconciling of differences between the United States and Iran, and we found out that the Boeing airliner was likely a result of a mechanical failure. So what happens in the stock market? All-time highs. All of a sudden, those bullish vibes are back on Wall Street, and we continue to have those bullish postures across the board. So we'll talk about all of that, then we'll get into our trade application example, where I found another consumer discretionary stock that's having a nice bounce towards a new high itself. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 8th, 2020. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee. Also, we appreciate those of you that click like and retweet for these Market Outlook related posts. I noticed that yesterday's came up quite shy from our typical goal, so make sure that you're not forgetting to do that. Also, be sure to join us at our group at Facebook at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into the charts. As you can see, I've got chart 4F pulled up here to start things off tonight. Wanted to highlight this because I wanted to show you how aggressive that movement was yesterday once we heard about the missiles from Iran. You can see right here that the futures markets were really nosediving at that point. I've got /ES pulled up here. So these are the futures contracts. And as a reminder that markets do trade around the globe pretty much 24/7 during the week through the futures market. So as you can see here, the futures market actually went all the way down to a 1-month low in the overnight session. You can see right here kind of where I'm pointing with my mouse is the lowest point on this entire chart right here. And this chart is a 20-day chart, and that's trading days there. So that's basically one calendar month that we're looking at. So in the overnight session, we actually hit a 1-month low. By the end of today, we hit an all-time high in the stock market. Think about that for a second. So that just goes to show you how volatile the futures market was overnight. We went from a 1-month low to an all-time high in less than 24 hours. Now remember, you're not seeing that if you're pulling up the cash index. So if you're just going to pull up something like SPX, you know, the selling that we saw in the session here today wasn't anywhere close to the low price that we established back here in early December. So those of you that are trading the futures markets, you might have experienced a little bit of a whipsaw there last night as there was so much chaos in the market. But as I mentioned in the intro, what has been consistent is that the stock market continues to rise. So let's now come back on over here to our typical routine of chart 4B and show you that from a market forecast perspective, we continue to have bullish postures across the board. The S&P 500 is the chart in the upper left, and as you can see, it did hit an all-time high on an intraday basis today. We didn't quite close at an all-time high, but on an intraday basis, we now have that high label moving over to today's candle here. So we ended up being higher by about 0.5% today. That was good for 15 points on the S&P 500, and we closed at 3,253. The Dow Jones actually had a decent day in its own right, and there was some concern that perhaps the Dow would get hit today as a result of that crash that I mentioned in the intro from Boeing. Remember, Boeing is the most important Dow component because it's the highest price security in that price-weighted index. So somewhat surprisingly, the Dow actually closed higher today. In fact, it beat the S&P 500 when all the smoke cleared there. It was up 0.56%. The NASDAQ Composite led all indices. It was up 0.67% today. Not only did it close at a new all-time high, it also hit that intraday all-time high there as well. And then last but not least, we do have the Russell 2000. It was up 0.32% today, but it retains its bullish posture. Some of you will recall that yesterday in the video I was mentioning that it is the Russell 2000 that is most likely to lose its bullish posture before the other indices, because you can see that green line is just barely hanging on in that upper reversal zone right now. We're basically at 81 and falling right now. If that number drifts below 80 at that point, you'll start seeing the pink background color signifying a weekly bearish posture at that point. But right now, saved by the bell, a decent little bounce there, and we'll see if that can continue going into tomorrow. But for the most part, the story of the day is big snapback rally in the futures market, which led to a continuation of bullish trends that we have already been in the U.S. markets. If we were then to have a quick little conversation over here on the web, wanted to show you some of the tools that we use in my factor-based swing trading class, which I held earlier here today. So I have my factor selector up here at the top, and wanted to kind of show you what's been taking place here since we have been kind of away from the holiday season recently. You might not have been able to keep up with some of the trends, and you can see here that the quality factor continues to be leading in this marketplace, and it should come as not a big surprise there if you're considering what some of the leading stocks of the market are right now. For instance, if we were to come back on over here to the paper money platform, and let's just go ahead and pull up just regular chart 4A for this. But some of you might have been keeping your eye on some of the world's largest companies, such as Apple. Apple actually closed above $300 here today. It was up 1.6%, a new all-time high with a market capitalization well in excess of $1 trillion at this point. Many people feel that Apple is considered a quality stock with, high measures of ROE and ROI, also having a fairly clean balance sheet, etc. We can also see that a stock like Microsoft would be categorized that way as well, and Microsoft also hit a new all-time high in today's session. It didn't close at a new all-time high, but on an intraday basis it did. So not a huge surprise to me to see the quality factor continuing to lead this market right now. On the downside of the market, we have those low volatility stocks. Remember, those low volatility stocks are oftentimes REITs and utilities, stocks that have a lot of interest rate sensitivity. So what that tells me is this is a market that is still willing to take risk. It's kind of pushing aside some of those lower risk areas, like your utilities, that tend to do better when the rest of the market is struggling a little bit more. So right now, this continues to be a market that's led higher in a lot of cases by high quality technology oriented stocks, and some of those more boring utilities and REITs are being left in the dust. So for those of you that missed the class here earlier today, it is posted to our calendar. So if you're a premium member, I'd invite you to watch that recording. And of course, David had his options inventory trading class earlier today as well. So check out that resource when you have that availability. Tomorrow, I'll be teaching my question and answer session at 11 a.m. Eastern Time. So I look forward to seeing many of you there as well. While we're over here on the web, wanted to say thank you to those of you that clicked like on the Market Outlook related post yesterday. I was a bit disappointed in the total number. As you guys know, I try to shoot for about 100. We came up well shy of that. In fact, that's one of the worst numbers we've seen in quite some time. Only 67 of you took the 5 seconds out of your day to click like. So don't forget to do that. That tells David and I whether you want us to continue these videos or not. And when you guys don't click like, it tells us that you could really go either way with that. And I know many of you do appreciate the videos. It's just a matter of getting back into the habit of doing that regularly. So I'm going to keep today's video nice and short as a result of that. If you guys can get us back above 100 in the future, we'll get back to more of those half-an-hour videos, but I'm going to try to keep it short to maybe a 15-minute video here tonight. So let's quickly get back on over to our paper money platform and look at a couple of more charts here. Let's come on over here and take a look at 12 grid. Let's start with the asset class 12 grid in this case. As a reminder, the background colors of these 12 grid charts are going to determine whether we have a bullish or bearish posture according to the market forecast intermediate term line. A couple of things I wanted to point out here today with all the chaos happening in the Middle East. You'll notice that gold and oil really took a tumble here today. Oil was down over 3.5%, and gold was down nearly 1%. But you can see that that really put a damper or a cold, wet blanket on that really strong rally that we had in those commodities up until that point. In fact, you'll notice some pretty bearish candlestick formations here with bearish engulfing candles taking place there on gold, and on oil it sent us all the way back to that rising moving average. The good news is we did bounce off of that moving average once we arrived there, but the problem is that was a really aggressive sell-off day there. You can see when you're looking at all of these candles on oil here over the last 3 months or so, today's sell-off was the most aggressive candle that we've seen. So, you know, if there is all of a sudden a newfound peace in the Middle East, there may be some selling in some of those oil names as a result of, you know, the idea that oil will flow freely if there's no skirmishes taking place over there. I think we're getting a little bit ahead of ourselves if that is our mentality there. Nonetheless, that's kind of what the markets are afraid of right now and sending those down. Also, we saw the US dollar strengthen here today a little bit. You'll notice that it was up 0.27% there, but it does retain kind of that bearish longer term or intermediate term posture, I guess you could say there. So that's kind of the big takeaway here from the asset class perspective. Let's take a quick view at the sectors as well. And you can see from a sector perspective here that we had mostly green across the board today. We did have a couple of exceptions to that, but our big winner was technology. It was up over 1%. I mentioned Apple and Microsoft earlier, so it did quite well today. We did see on the downside of the equation, a couple of losers out there. We had energy down over 1% here today, so we're now back below a falling moving average on energy stocks. And then utilities also struggled just a little bit today. So again, going back to that idea of low volatility stocks struggling on a relative basis. You will see that the discretionary stocks did close higher here today and actually hit kind of an intraday 3-month high before settling back, but still closed higher by 0.30%. So I mentioned in the intro that I wanted to discuss a discretionary stock for our trade application example today, so let's get to it. I'm going to come on over here to chart 3A. And we're going to take a peek here at ticker symbol CHGG. This is a stock that many of you probably are not familiar with. It's Chegg. They do a lot of education work, so it's a lot of tutoring for college students, and they sell college e-textbooks and different things like that. But anyway, kind of like this setup here where we had a stock that was breaking out in November. It rose for a few months and then decided to go sideways for about a month or so. More recently, it has now used that rising 30-day moving average as a launch pad higher. You can see that today was an important day because we broke to new highs here today and we closed above them. Yesterday, on an intraday basis, we did break that prior high, but we closed back down below that breakout zone. So today was an important day for this stock. It allows us to close above that prior resistance area. You'll also notice by the background color of the chart that we do have a bullish near-term posture there. So what I thought we would do is practice a simple stock trade here in today's case, doing kind of a swing trading mentality. And so what I'm going to do is I'm just going to buy these shares at the current price of $40.10, and I'm going to put my stop loss 2 cents below the low of that candle. So my stop loss will go to $37.54. If I want to maintain a 1-for-1 reward risk relationship, that means that my upside price target will be up here towards $42.66. So let's go ahead and place that trade. I'm going to right click on the chart. I'm going to come over here to buy custom with OCO bracket. I'm going to clip that little paperclip icon together there. We'll just leave this in here as 100 shares for educational purposes. I will try to get this filled at $40.10 tomorrow. On the upside price target, as I mentioned before, I'm going to shoot for $42.66 there. Change that to a good till cancel order. To change that directly below it to a good till cancel order as well, that represents the stop, and the stop is going to go down there at $37.54. Go ahead and click confirm and send and ship that off. All right, well, thank you for joining me here yet again. We did have a bullish market here today, quite the reversal on an overnight basis. We hit an all-time high in the US stock market today, and the trends remain bullish. So with that, I want to wish you all the best of success with your trades and your investments. If you got value out of this video, I would encourage you to click like on Twitter, and David should be back with you tomorrow. Have a great day, everybody. Bye-bye.